Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. The New York Times article on long-term care insurance quotes an industry professional who says that long-term care insurance is risky. Now, why would the New York Times article say that long-term care insurance is risky when over 95% of the long-term care insurance policies sold today are backed by companies with high financial ratings? Why would the New York Times article say that long-term care insurance is risky when the article already stated that savvy consumers kept their long-term care insurance policies? And why would the New York Times article say that long-term care insurance is risky when earlier in the exact same article, they state that the insurance companies have paid much more in claims than they had originally projected? Long-term care insurance policies have paid hundreds of billions in claims to over 1.5 million policyholders. That doesn't sound risky to me. That sounds like a great deal for the consumers. So why does the Times think long-term care insurance is risky? Because the rating agencies think long-term care insurance is risky for the insurance companies. I quote from the article, Doug Baker, a director in Fitch's U.S. life insurance group, said long-term care insurance is one of the riskiest in our universe because of the lingering financial burden from underestimating the number of people who would tap their policies. Please be aware, they are quoting a man who works for a ratings agency named Fitch. His job is to rate the financial stability and profitability of insurance companies. Fitch does not rate the quality of insurance policies. Fitch does not determine whether a consumer will benefit from owning an insurance policy. Fitch rates the financial strength of insurance companies and whether or not the insurance company is likely to make a profit. The New York Times article's narrative is that long-term care insurance is risky for consumers. It's not. Just the opposite is true. Long-term care insurance is risky for insurance companies. Now, not all insurance companies. Long-term care insurance is not risky for all insurance companies. It's risky for some insurance companies, particularly those companies that sold long-term care insurance in the 1990s and the early 2000s, because those policies had the richest benefits and the lowest premiums. The New York Times article correctly states that Fitch and other rating agencies are concerned about, and I quote, the lingering financial burden from underestimating the number of people who would tap their policies. In other words, the policies the insurance companies sold in the 90s and the early 2000s were underpriced. We know that. The actuaries and the regulators expected the claims to be about half what they actually are. Now you can understand this statement in the article. When Doug Baker said long-term care insurance is one of the riskiest in our universe, he's talking about the old, underpriced policies and the effect that those policies are having on the insurance companies' bottom lines. But is long-term care insurance risky for all insurance companies? No. We know that because the companies that sell most of the new long-term care insurance policies today have very high financial ratings, and they are making a profit. Why would Fitch give a high financial rating to a company that sells long-term care insurance today if selling long-term care insurance today was risky? The older, mispriced policies are risky for the insurance companies, not the newer policies. The newer, more accurately priced policies are not so risky for the insurance companies. As I mentioned in the previous episode, the average company selling long-term care insurance today has been in business for over 130 years. That's pretty stable. And the average insurance company selling traditional long-term care insurance today has been selling it for over 27 years. And 9 of the top 10 insurance companies selling traditional long-term care insurance today have either superior or excellent financial ratings.